Welcome to Eagle City Multifamily Show, where we talk about how you can get started in apartment investing. But first, I wanted to say that this is not legal advice, not financial advice. It is simply professionals sharing their experience in apartment investing. And today we have this awesome guest, Ruth Hiller.
So, hi, Herb. Thanks for having me.
You're very happy to have you on the show today, Ruth. And Ruth, I would like if you're okay with sharing a little bit of your story, how you got started in apartment investing and what you're doing currently, and then we'll go into some questions from the audience as well.
All right, sounds great. Thank you. So I call myself the accidental businesswoman. I've always bought and sold real estate, but never really considered myself a businesswoman or considered it a business till about 3 years ago. I've had multifamily in my family since 1940, and I ended up in partnership with some family members about 23 years ago in a 118 unit multifamily business. And I'm 50% owner. And then I really didn't know anything about running a business. I come from an art background. So it's just like, I kind of just cashed a check. And then I was at a Tony Robbins event maybe 5 years ago. And Tony's like, is there a problem in your life that you really wanted to solve? And at that point, I wasn't really getting along great with my business partners. And so I'm like, gosh, I really need to solve this. I want to learn more about the business. And so fast forward maybe a couple months, like I knew I needed to change the business, but I didn't know how, because I didn't, but my why was like, I really wanted to figure it out. And I was sitting on a bus in Malaysia, and it was April of 2019. And I sat across from this guy and I said, so what do you do? And he's like, I teach people how to invest in and syndicate large multifamily properties. And I'm like, are you kidding me? Like, I have one. Can you help me? And so that's how I ended up in my mentorship program that I joined. And then the first day I joined, I remember I went to his first event. And it was a rat race to a retirement event. And I took 500 pages of notes. And the reason I joined his group was not so I could be a sponsor. It was so that I could help the business that I currently owned. And I feel like I, owe everything to that. And now, since I joined the ecosystem 3 years ago, I ended up selling the 118 unit multifamily with the family members. That was a 4-year process, which I have to thank Brad for that. And then I'm a limited partner, passive investor in 11 deals, and I'm a co-GP in 3 deals totaling 2,800 units just in 3 years. So that's how I got my start.
Wow, that's an amazing story.
Oh, thanks.
Yeah, I've known you for about maybe a year and a half so far, and we're in the same apartment consulting group and the Brad Sumrock group, and it's been great knowing you and being able to talk about your background and how you got started from a completely different arts background, right? And a little bit of my background is manufacturing. I helped start and grow a manufacturing company in metal manufacturing, and pretty much totally different, right? Some of the business aspects are similar, but a totally different field of operations. So that's very, very good information there, Ruth.
Thank you.
And I have some questions from the audience, and a big question I would like you to talk about, if you've had much experience. If not, no worries. But it's on how a lot of people didn't know they can invest their retirement accounts in apartments. And have you had any experience with that?
I have. In the last deal that we just closed, I had 3 IRA investors. And so I worked with a company that helps you with that. So you can invest your IRA or 401k into multifamily. You need to have it transferred to a different intermediary, right? And so, let's say you have your IRA at, I can't think of it, like a Schwab, right? Let's say your IRA is at Schwab, and you would have to take the money and transfer it to an intermediary. Not all your money you would not take your whole IRA. You would only take the amount of your investment, because once it's in the intermediary, the other IRA account, it doesn't make money. So you don't want to just take all your IRA and put it there. So you'd still leave some in your regular IRA. And then if you're going to do real estate investing or whatever kind of investing you are, you would move it to a trust company that handles multifamily.
Awesome. That's great. And yes, as Quest Trust Company is one of the largest, I think, in Texas. That is a great, there's others as well, but that's a great one. Quest Trust Company is one for the audience.
Yeah, that's who we used. And the fee, I thought the fees were really low. It was like, I think it's $350 to set it up and transfer it. Maybe it was less than that. It was $100 to set it up. And then I think once you transfer into the investment, I think it's around $300. So the fees aren't very expensive. And that's why you don't want to leave money in there in between, because it doesn't make money.
Right. Okay. And let's move on to another question. What's a typical minimum investment that you see, Ruth, in deals?
In the deals that I've sponsored, the minimum investment is $50,000. I've seen $75,000. I've also seen, we do what's called a 506B. So it's a security, but it needs to be friends and family only. And the reason I like that sort of deal is that my friends and family who've never invested can invest. And I've heard of some sponsors that might, on a case-by-case basis, take 25 or 35 if you really don't have the full 50 to get started. So that's something you can always discuss with the sponsor team. Needs to be a 506B, and they don't like to do it a lot, but I know they do it.
Right. I've seen that some too, where they'll negotiate for someone coming in the first time. And that leads me to another question. Do you let, who all is qualified to invest? Do you let just anybody come in, or do you recommend some people not investing in apartments? Maybe it's their first time or something.
Well, anyone that invests in a deal that I co-sponsor, I have to the people that I bring in, I have to have a pre-existing relationship with. So I couldn't just talk to someone on the street and say like, hey, I've got this deal. I get a lot of referrals. And so I need to establish a relationship with these people, have a couple phone calls, some Zooms. If they live in town, we would meet. But I had a woman call me the other day and she's like, I have $750,000. And I was like, I don't want to take all of your $750,000 because you haven't worked with me before. So, I'm not a financial advisor, but I would feel uncomfortable, and taking that much money from one person who'd never invested in apartments before.
Right. Their first time. Yes, I agree. There's more deals later, right? We're always doing deals, and we're bringing deals to the our network, right? So
yeah, and Tony Robbins always talks about diversifying. So I diversify across deals, right? So it doesn't have to be in crypto or stocks or whatever, but if you're in a bunch of different deals in different markets, to me that's good diversification.
Yes. Okay. And what do you see as the average or typical returns? I know we don't guarantee, but typical returns, and how does that work?
Well, it's changed a lot. 6 months ago, in the last 3 years that I've invested, up until about 6 months ago, we were seeing an 8% annualized cash return and a double your money kind of thing in 3 to 5 years projected. And now, the Fed raised interest rates and inflation has gone up. So lenders aren't giving, instead of an 80% loan, now they're only giving a 50% loan. So some of the cash returns I'm seeing are lower, but I still really believe in the teams. And I think that, before there were people lined up to buy these deals, and they're not lining up anymore. So I think now's a really good time to get some good deals. Your cash flow might be a little less, we used to say 8%. Now we're seeing like 5 to 6%, depending on the loan proceeds.
Okay, yeah, that's cash flow, but then we also get distributions at sale or at refinance too, right? Like
Yes.
gains, all that gets distributed to all the investors, right?
Yes. There was, I'm in a deal in Florida that I invested in 2019. And I think the purchase price was 21 million. And that was 3 years ago. And now it's worth 32 million. So I think that's 132% return in 3 years. And so we were going to refinance that. But as you know, the lending rates went up, but we're still looking that the lending rates are coming down. And so we might refinance it and give some of the return of capital to the investors.
That's awesome. That's, that must be a fairly decent sized deal for that amount. 21 million, what's that, 120, 150 doors possibly, units?
It's around 150. It's in Florida.
Yeah, that's amazing. That's and so here's another question that I like to talk about. What makes you believe in the deals that you invest in? Why some and not others, right? What are some things?
When I joined the ecosystem that we're in, I'm a people person and I have a really good intuition. And so I usually go by my intuition and then I do due diligence. And so for me, the most important thing is the sponsor team and their track record. I don't care where the deal is. Like, I used to say, I'm only going to invest in these markets. But if the sponsor team has a proven track record and there's a good asset manager on the team, then that's what I look for. They have to have some sort of experience managing that kind of asset.
That I see what you mean there, because the people that you're investing with can do a lot of that due diligence, right? If I trust them and they are doing the underwriting and searching the markets, across the street might be a lot better than across the street, right, in the same market, right, sometimes. But the boots on the ground, the people that are vetting the deals know their market, right? So I'm with you. I believe if the people I trust in, that's a good point. The people you trust in are doing a lot of work for you, right? Right.
So, I always tell people, don't ever invest with someone you just met off the internet. I was having a conversation one guy because he saw my post and he's like, "Oh, multifamily sucks." And I was like, "Why?" And he's like, "I've lost a ton of money." And I'm like, "You have?" I'm like, "Where are you finding your deals?" And he's like, "Oh, crowdfunding platforms." And I was like, "Oh."
Great. That's good information. Yeah. So build relationship with people and learn to know and trust people, right?
Yes, exactly. And see what their track record. And then, usually I have a due diligence passive investor checklist that, if anyone wants, they can download it. And it just kind of tells you the questions to ask. And I think any investment you go in, whether you're hiring a fiduciary or you're hiring whatever, you need to ask people, a sponsor team, you need to ask these questions, because a lot of times, we don't ask for a reference. We just, I myself included, "Oh yeah, that sounds great. I'll just do it." Right.
Right. Yeah. That's that passive investor checklist sounds like a great idea for, new people coming into the market as well.
Yes, definitely.
Yeah. Awesome. And here's one more question I have from the audience. So why do you invest in apartments? And I'm thinking asset classes, right? Versus other classes. Not that we don't invest in other classes, but what are some of the things why you invest in apartments?
Well, like I told you before, multifamily has been in our family for 3 generations. And my grandmother, who bought it in 1940, supported herself and her kids her whole life till the day she died off of those properties that she bought. And so for me, I just like multifamily versus single family or other things, because People always need a place to live, especially the workforce housing. And so, and same thing like versus single family homes, it's like if it's empty, then you're screwed. But multifamily, if you have a 100-unit building and you have a couple empty units, you're not going to feel, the financial pain as much. And so I just think it's just a better opportunity. And to me, it always feels like a safer investment, right? Because I would say I'm like 80% in multifamily and the other 20% in like stock, cryptos, and cash. So I'm all in multifamily. I've seen it, do great for my families year after year. And then in the ecosystem we're in, also the deals I'm in are doing all of them except for one are doing great.
Wow. That's impressive. That's good feedback for, people that want to learn more about apartment investing. And yeah, so that is so awesome. And one of the things that as we're talking about this, there's A, B, C, and D class, right? And so where do you typically, are you up on the A class or more in the B and C class?
I would say the majority of my portfolio is B and C class. And, now C class is kind of aging out a little bit. So I still, I'm a sponsor in 2C class, and then I'm a sponsor in a B class. But, again, it always depends on like who took care of it before, how they took care of it, how much deferred maintenance. You always want to buy whatever class you invest in. You always want to make sure that the median household income can support the rents that you're asking for, and you want to make sure that it's a low crime area. So, but I still like the workforce housing because everyone needs a place to live.
Yes, that's what I'm looking at too, is B and C class, right? Because when the economy goes down, they might step out of an A class into a B or C class. And when it goes up, they might be moving into the area from other areas, right? For new employment and all. And people can always afford a B and C class if they can't afford an A class, right? So like you said, the workforce market is great in the B and C class.
And I always look for B and C class in a slightly better neighborhood, like in a C class, maybe it's in a B or an A neighborhood.
That's a great thought there. That's what a deal we're working on currently. It's a C class building in a B class neighborhood. So there's lots of new development right around this apartment, for example, and that affords the opportunity for this asset to increase, right? Instead of, wane out and get worse, right?
Exactly. Well, that's awesome.
Yeah. So it was so great having you on the show today, Ruth. And we'll invite everyone to watch us on the next show.